Yeah, thanks for having me. We've got a few more months of high prices to come just yet. The market is really reorganizing itself with the sanctions that are being applied on Russia. Russia is a huge supplier of nitrogen, phosphate, and potash, and also a low-cost supplier to the global market. So as all of these sanctions and new trade arrangements are sorted out, we see a continued environment of high fertilizer prices for, as I said, at least the next couple of months.
What would happen to prices if we do see a ceasefire in the war, considering that it's not like there would be a ceasefire and suddenly all would be restored in terms of supply, logistics, transportation, sanctions, etc.?
Yeah, it's a question we've been getting a lot, and there would be some positivity, I guess, in terms of sentiment that would help to bring prices down a little bit. But these sanctions are not going to be unwound anytime soon. And lots of companies around the world have been very reluctant so far to deal with Russia, and that is with the fertilizer producers directly, but also shipping companies have really resisted going there so far. Some of that resistance we think will peter out, but ultimately, yeah, we think that this has still got some time to go yet.
When you say some time to go, Chris, what's the timeline here?
Yeah, so we think as we get into the second half of the year, we may start to get a little bit of price relief. A big reason for that is China. China is a large exporter of nitrogen and phosphate. Around October last year, they implemented some rather restrictive export barriers. We're expecting those to be lowered once we get into June, July. And that will help to relieve the market somewhat. But we're also expecting a little bit of demand destruction and rationing to start to set in. And that should help to start to bring prices lower, as well as just a general correction